Hello again, everyone. Welcome back. In this ETF and stock video, I'm going to focus on XLC this week and the two major holdings within XLC, which are Meta and Alphabet. XLC was down $3.43 this last week, 5.2%. The only ETF, the only sector that was worse was XLE Energy, down 6.2%. So $3.43. The interesting thing, the 10-week moving average has just slightly crossed below the 21-week moving average in here. The last time we got a cross like this to the downside was all the way back up here the week of October 17th, interestingly, of 21, basically 2 years ago. So now we're going to see what kind of follow through do we get to the downside. I'm expecting significant movement. We'll see what we get. All right, let's take a look at the daily chart. And let me go back over here like this. And what I want to do is I want to go to this scenario, this picture right here. Okay, so this looks like a trading range to me. Okay, since the highs that occurred in July, it looks like we've had a pretty solid little trading range. And then when you break down out of that trading range, like we did Thursday and Friday, what you do is you project the width of the trading range down. And interestingly enough, it comes right into an area that I would have had as key support right in here at around 60. I've got it as 59.89, but for all intents and purposes, let's just say 60. So, a little bit more movement to the downside here on XLC before potential support. I'm not saying this is where it's stopping. I'm just saying this is where I think it could get some at least intermediate support. We are getting a little oversold on RSI. Here's the components. Look at this. Meta, 23.76%, Alphabet, 22.5%, combined 46% of XLC from these two companies. But Alphabet is made up of both Google and GOOGL. So Alphabet Class A and Alphabet Class C make up this 22.5%. Now let's take a look at Meta. Okay, here's the weekly view of Meta. It was down $11.92 this last week, and you can see the range this week, $38.95 from high to low. Quite a bit of volatility kicking in here. Now, we don't have the rolling over on the moving averages just yet. Kind of looks like maybe we're back up over here like we were September of 21. Okay, the other interesting thing is, look at this is the March of 2020 pandemic low, sell-off low, okay? Look how Meta had gone well below that and then has come back in this super strong move that we had in here. The next view I want to take a look at is looking at the daily, and let me roll over here. Here's the daily moving average view, but I want to go, I'm trying to get the right scenario here, right here. Okay, this is what I wanted to show you. Several things. I think this was a bull trap. Okay, so we had the highs that occurred in July. It stuck its nose above that 326.20 level on October 11th, went a little bit higher, reversed, and has collapsed back down since then. This looks like a trading range, similar to what I talked about on XLC. But then the other thing is, look at these gaps. This huge gap that occurred in February of 22, it was closed with the movement that occurred, the rally that occurred into July. Then we had this exhaustion gap that occurred in October of 22. It was closed with the movement that occurred in January as the rally started. Then look at these breakaway gaps, I would call them, that occurred in these two moves. This, to me, creates pretty significant targets for as we start to break down. You need to keep an eye on these levels down in here at 214, say 215, and then right in here at about 153, 154. So it's going to be interesting to see how soon does Meta come down and close those gaps. When I take a look at the Elliott wave picture, here's the Elliott wave picture I've got. Yeah, I've labeled this big move as an A wave of an A, B, C for a three-wave B move. And, I'm going with an ABC. It may end up being a 1, 2, 3, and we have a bigger 5-wave move, but there's nothing wrong with just calling it an ABC for now, because then the C wave that I've got is, projected to be equal to A is the first target you go for. So right now, I'm not worrying about where that could possibly end up, how low it gets. I think at a minimum, I'd be looking for it to come back down and retest the November 22 lows. Okay. And by the way, the Russell 2000 is the first index to do that. So going to be interesting. It did it this last week, actually closed below the lows. Anyway, so right now, we had this big extended wave A, ending diagonal pattern. Yes, overlap, ending diagonal pattern for this for the wave C. And now I think we have begun the move to the downside here in the C wave. All right, let's take a look at Alphabet. Okay, this is a big, strong move to the downside in Alphabet Class A, Google, GOOGL, down $13.43. Look at the range on that. $19.15, closing below the the week of July 16th low. Okay, so we're basically what, about 4 months, last 4 months, giving back the last 4 months. You go up the staircase and come down the elevator. Okay, and right now it sure looks like that's what it's doing. We don't have a moving average cross just yet, and you can see this can put in quite a bit of volatility. Here's the comparison to the March 2020 low. So Meta had gone below this low. Google's not even close to that yet. And we'll see if it gets back down here. $50.44 was that, pandemic sell-off low. And let's take a look at the trend. Oh, I know what to look at. Let's look at the daily right here. Look at this trend line in the daily chart from March of this year all the way through current. Okay, so we had pretty good touch points in here. We broke down in September through it, pulled back up for the classic kiss goodbye on October 11th and 12th, and now we are breaking away to the downside, resuming the move, closed this gap that we had in here, and continuing to move to the downside. Now, when I look at the Elliott wave picture that we've got, I think it's an ABC. That's the way I've got it labeled for now, versus 1, 2, 3. I'm going to go with ABC, as I mentioned with Meta. And this was a very complex labeling. There's no doubt. WXY, combined corrective, couple of major zigzags in here. And now we're getting the strong move to the downside. We are oversold on a daily basis. Wouldn't be surprised at all to see it bounce given this kind of downdraft and given this kind of oversold condition. But this is the picture I've got, and the expectation is that we're going to be heading down in a 5-wave move for a C wave. And the target, the first target would be that eventually, now it may take a while, but the first target would be down here at the November 22 low. So we'll see how long it takes to get down there. Okay, that is the picture on Meta and Alphabet and XLC. I hope you found the video helpful. If you did, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.